Hey guys, welcome back to another edition of the Market Preview. My name is Vasily, I'm a trading coach and professional forex trader. The main thing that happened this week was the bearish breakout of oil. And I know that many of you tried to buy it expecting the bullish continuation, but the market dropped. And I know that many of you were stopped out, and for many of you it led to a significant account drawdown. And after this event happened, many traders started blaming market makers, coronavirus, bad signal providers. And if you blame someone in failures of your trading, you are missing something. Here, if you want to really do it professionally, you should embrace the responsibility for your actions. You should embrace that you decide whether you buy or not. And the only person who suffers from your action is yourself. So learn on your mistakes. If you lose money this time on oil, next time think twice before making the same trading decision. Learn on your mistakes and next time be better. Keep being better and keep improving. And here in this market preview edition, so I'm trying to show that with the consistent rules, with the solid strategy, even if we lose on the short term, on the long term, we always are winners and we always have an edge over the market. And for today I have prepared for you analysis on gold. I have a very interesting trading plan on Euro Aussie for you, and also I will show you an interesting trade on the dollar Swiss pair. Here we apply just technical analysis. We don't talk about fundamentals. We apply just technical tools, patterns, and with them we are trying to make the predictions. So hope that you enjoyed this video, and don't forget to like it and leave a comment if you have any question or if you just want to tell me something. So let's start. So we are on the gold chart right now, and first of all let's try to understand with you what's happened with the price during this week. And as you can see, during this week we saw a very nice bullish continuation to higher levels. The market has perfectly violated the current structure high. We closed above that and then the market continued higher. And what happened during this week, the market has found the high here, the 1746 level, and from that level the market dropped. And though many traders say that the market here dropped just because of the manipulation, because of the central bank intervention, let me show you one thing here. First of all, let's analyze the price action. Here goes our current local market low, and from that level, 16th of March, the market started a bullish movement. Here we had a very strong bullish impulse from, 1450 level to 1643 level. So very impressive bullish movement. Then the market retraced. It retraced to 1560 level. And then we saw the second bullish impulse. So what we do here, we take with you the length of the initial impulse. We copy and paste that and make the projection. And what we see here, you can see how perfectly the market respects the rules of harmonics. We took the projection of the initial impulse and the market has perfectly retraced from the projection of the impulse. Yeah, very interesting, right? And then the market dropped to the downside, respecting the rules of harmonics. Why it is important for us right now? The market perfectly respected the rule of harmonics, and we expect that it will continue doing so. So we take our retracement leg, the leg of the retracement, and we also project that. And from the current high, we make the projection of the retracement leg. And here what we get with you, we take the potential point where the market will stop the bearish movement and from where we will expect the bullish continuation. But this is not enough. Also, we should add into consideration structure. Yes. So talking about structure, here goes our key daily level, and here goes our current, our previous market high. So here goes the zone, the potential reversal zone. This is quite a wide area where we will be looking for a signal to buy gold, expecting the continuation to higher levels. And talking about the top-down approach, next week we will follow gold on a lower time frame, on 1 hour and 4 hour chart. And on a 1 hour or 4 hour chart, we will be looking for some formation of the double bottom pattern or head and shoulders pattern that confirms the significance of the zone, then to buy the market, expecting the continuation to higher levels of structure. Yes. Also, if you're on the bearish side, if you want to sell gold, the best option for you is to wait for the breakout of the zone, because right now from this zone buyers will buy, and if you're on the selling side, the best option for you is to wait until the buyers will be stopped out, and most of the buyers will be stopped out when the zone will be violated to the downside. So then after the breakout we will sell on a pullback and expect the continuation to next daily level. Yeah. So you can see that next week on gold, it doesn't really matter where the market will go. If it forms some confirmation reversal pattern within the zone, we will buy expecting the retest of the current high. If it just breaks below the zone, we will sell on pullback expecting the continuation to next daily structure. Yeah. So always pay attention to details, pay attention to structure, and look for some patterns. Patterns are really telling, and if you consistently use them, you will always have the edge over the market, right? So now let's go to the next instrument. So let me show you the example of the application of the top-down approach in dollar Swiss and the trade that I took on Friday, a couple of hours before the market closed. So here, first of all, we're on a 4-hour chart, and you can see that after a steady bearish rally to the downside, the market started recovery. And what you can see is that on Friday, the market has reached a very peculiar structure level. Yeah, you can see that on the left, this level was respected multiple times in the past, and from that level, we saw many times a very strong reaction. To the upside or the downside, it doesn't matter. It really shows that for the market participants, this level is truly important, yes? So I was watching the market and I watched how it reacted on this level. And you can see as the market reached this level on Friday, pay attention to details. Here goes the engulfing candle. This is our last bullish candle, the test of the identified level. And once it reaches this level, we see immediate rejection, immediate strong bearish candle. And the range of this candle is bigger than the range of the bullish candle. So it's a very good indicator of the willingness of sellers to sell from that level. And that a lot of pending orders were placed on that level, right? Now let's switch to 1 hour chart and let's see what confirmation I found on the lower time frame. So I'm on the 1 hour chart right now, and on the 1 hour chart here, pay attention again to the details. If we closely analyze the price action, we can see that the market has perfectly following the rising trend line right here. Yes, we have the 3 touches of the trend line, and we consider this trend line to be confirmed. Moreover, here we can notice with you the classic formation of the wedge pattern. Yes, of the rising wedge pattern, and then the breakout of the wedge to the downside as the market reached the strong structure. You know the classic example, like if you learned on the Baby Peps website, for example, they have a lot of pictures with such market sentiment. So the market broke to the downside, retested the minor structure right here. Yes, you see here the minor structure, and here I placed my pending order, the sell limit order, and the market touched the limit, so I opened the trade. My current position looks like that. I sold from here. Here was my entry, and my stop is lying just above the previous minor structure, and minor structure is right here, this level. Yes, you can see that here we have indeed a very nice level. So I placed my stop just above this level, and I aim for the initial target, this level right here. Yes, you can see the descent structure on that level. Yeah, and for the second target, I will aim at the current market low over here. So we have a very nice potential risk to reward for this trade, and we are protected because the stop is placed above the trend line and also above the minor structure. Yeah, and if the market just goes up, stops us out, there's just no reason to hold because it will return to the boundaries of the wedge. So we're just wrong in our predictions. So always try to tell a story, try to explain to yourself what the market participants are doing, what's happening with the price. And when you start seeing the logic of the market participants, it will be much easier for you to make trading decisions. Yes, so let me right now share with you my trading plan for the Euro Aussie pair for the next week, and there we also have a perfect example of the top-down approach. The setup that I want to show you on the Euro Aussie pair is one of my favorites, and here we have a perfect example of the application of the top-down rules, and based on them we're going to build our trading plan for next week. First of all, what we should pay attention to is the key levels. You can see that right now, after a very strong bearish rally, we finally see the first green bullish candle. And if we check where are we standing and whether we have some structure on the left, you can see that we have finally reached some key level. But here also look at the long-term perspective. I zoom out the chart, and here if we analyze the trend lines, look, here goes what? A very interesting trend line. Yes, and why this trend line matters to us is because right now the market is testing this trend line. Yes, so we have kind of the perfect convergence of the rising trend line, horizontal structure on the left. So why not to look for a nice pullback trade from that level? So now, as we identified a very strong structure area, the next step is the lower time frame analysis and the reaction of the market on this level on the lower time frame. So I'm on the 4-hour chart right now, and on the 4-hour chart right now you can see that on Friday the market has formed a very nice doji candle based on that level. The market tried to go down, the market tried to close lower than the previous lows, but was rejected, and then we formed the doji candle. Yes, the perfect example of the doji candle. And then the market started to consolidate, and currently the market in indecision, in consolidation. From current perspective, we don't know where the market will go. Here we have a perfect example of the inside bar formation, and you can see that right now the candles are trading within the range of this bearish candle, and the breakout will show us the future direction of the market. So it may drop to the downside and go lower, but I will trade only in case of the bullish reaction. And on 1-hour chart, let me show you what I'm looking for. So I'm on the 1-hour chart, and on 1-hour chart, here, what do we see with you? Alright, the classic double bottom formation. Yes, so follow the price action. The market drops to the downside, retraces, goes down, retraces. Yes, double bottom. Maybe now we will form the triple bottom or the triangle. Difficult to say right now, but clearly we see with you a reversal pattern. Yes, so what will we do next week? Our task is to wait for the bullish breakout of this minor structural resistance. I want this resistance to be broken to the upside, and then I will buy the market on pullback, expecting the continuation to high levels of structure. My position will look like that. Once the market breaks to the upside, and by the way, it should be strictly the 1 hour candle close above this level. Yes, it should clearly close above this level. Then retest. On the retest, we will expect the continuation to, as the first target, this level over here. Yes, the level around 173.1 will be a nice initial target for this trade based on the structure highs right here. Yes, I think it will look left. I would not be so aggressive. I would place the target here. Yeah, 170.7 will be my initial target for the trade. And stop will be placed below this lower high right here. For now, it will be there. Over here is lying, will lie our stop. But if the market will form the triangle, we may adjust the stop to next higher lows. But for now, we don't know. So this will be the initial target. And then for the continuation, we can aim at this level over here. And then, who knows, the market may go even higher, and then the growth potential will be unlimited for us. So the trailing stop will be applied. At least when the market will reach the 172 level right here, set stop to break even and start protecting your position. Yes, so once it will reach this level, we will stop to break even our position, and we will guarantee that at least we will not lose money on this trade. So this is your plan. Let the market break the resistance, buy the retest, and then expect the bullish continuation. Here are your initial target, second target, and then look for the further bullish continuation. If we just, after trading in this range, if we just drop to the downside, setup will be invalid, and we will not just trade. We will be looking for another setup. So I think it's just the perfect conjunction of the multiple time frames, and it's very, very interesting how it all works together, right? So it's enough for the Euro Aussie, and now let me tell you something. So thank you guys for watching, and I'm planning to record some educational video for YouTube, and if you want to propose some topic, for example structure, harmonic patterns, indicators, just feel free to propose. I really want to know what you want me to talk about and what to educate you about. And also don't forget to like this video, subscribe to this channel, social links in the description below, all this crazy stuff that I should repeat all the time. Godness, So thank you for being here, enjoy your weekend, and good luck next week.